Welcome, ladies and gentlemen, to another edition of the Grey Market Talk with a former retired market maker, that would be me, and a still magnificent portfolio manager, chief investment officer, and former bond trader, which will provoke some interesting questions for Nic later. And thank you for being here, Nic. You had a week of culture and golf, as you told me in the green room a second ago. Would you recommend to me to try this as well, culture and golf?
Absolutely. Got to do it.
Even though I'm uncultured and don't play golf.
Doesn't matter. Well, there's a time for everything.
Excellent. So I was wondering, we had a week which should become actually a quite interesting week. And as it turned out, the headlines were interesting, but the outcome was actually quite boring. We're going to discuss a couple of these points. I just want to throw in, yes, we had the Trump indictment, say a few words about that. Then we had the BRICS meeting, which should have been interesting. Then we had Jackson Hole, which should have been interesting with the development of the rates. And we had NVDA, which also should have been very interesting, which might be if I give my analysis a little bit later. Sorry, I'm getting brighter and brighter here on the screen. I hope you're not bothered if you just listen to that. Anyway, so we want to discuss all these points, and I've prepared a little fun slide deck today, which I'm trying to share, and you tell me, Nic, when we see that on the screen. And we start with the elephant in the room, proverbial straight away. When I saw if you're just listening to that, it's the mugshot you have seen of President Trump when he was arrested and, was officially in jail until a bail bond of, I think, $200,000 was posted, which I think is quite ridiculous. Either you ask him to pony up $2 billion, or you don't have a bail bond at all. The mugshot, obviously, I don't know. What do you think? How many hours did Trump practice for this picture?
It's very good, isn't it?
He looks like bloody Patton in the Second World War. It's a real war face. You don't screw with me. And, let me give you and you can shoot me down, my weird conspiracy theory, what will happen here. With this mugshot and all the memes I've seen from the left and from the right on the internet, I think this just won him the election. Why do I say something like that? What he needs to have a certain percentage of the black population in the United States. And a lot of black people in the United States have been victims to the police, to the state. Yeah. And if he only gets 2% of the black vote, then the Democrats can go packing. And this picture is exactly what it transfers. There is somebody who, by all means, yes, you can trump up, funny word, trump up all sorts of charges. But in reality, what the guy has done in the olden days, when you and I grew up, would have never, ever provoked an indictment from a jury. Now the guy has 4 out there, and he looks like Patton, ready to slaughter the Nazis on this picture. So in my scenario, obviously, I'm bearish, and I believe there's a recession which could have depression-like feelings with deflation coming in. The market will tank, economy will falter. I've heard this new word, workforce hoarding, which is happening in the United States at the moment, which I thought is very interesting because we don't see the employment figures going down. Even though the demand for products is clearly declining and the revenues are going down. What will happen if we see a recession and all these companies who were hoarding their workers, they will have to fire them eventually when the pain becomes too big. So you have this self-inflicting spiral coming into the market that will allow the Fed to, or will not allow the Fed, will have the effect that the Fed has to reduce the interest rates. The market will keep on falling. The election cycle will happen. People are pissed off because they're losing money. They're losing their jobs left, right, and center. And Trump will be the guy out there who offers solutions. Whether they might work or not, completely different page. But he will offer something the people will like, and they have seen him before. If he chooses Vikram Ramaswamy, you correct me if I'm wrong, as his running mate, I saw the conversation on television for the GOP candidates. An awesome guy, more conservative than I've ever been. He loves Trump. He said he would he would, how do you call that? He would get him out of jail on the first day. Pardon, that was the word I was looking for. If he chooses Vikram Ramaswamy, plus the scenario about the economy I was painting here, you will have a next President Trump. Plus, nobody thinks it is possible at all that he could win. And then we have a really bloody interesting scenario over there. Am I completely over the top, Nick, or does that make sense?
Well, I don't know about the steps to all of this, but I think it's highly plausible that that we do see Trump again in power. So, about the recession bit and everything in the middle, I don't think it's actually necessary to get Trump back in. I mean, let's face it, there's a lot of question marks about the warmongering that's going on, and it could well be that Trump becomes the guy to come back and deal with all of this.
He might even run for president out of jail. That happened before, by the way. Under Roosevelt, it was some obscure communist who was in jail, but who was still running for president on the ballots. Obviously, not even remotely possible to collect any votes, but it's an interesting scenario.
Absolutely.
The only scenario I had in my head is how Biden could turn it around if he would take Trump this ammunition away now and pardon him straight away for everything. Biden would look very good. Trump would immediately, like a rug pull, he couldn't fight against the system anymore. The system just pardoned him. That could be on the card. Then you might not have a President Trump. If they keep this pace up, I think he has a very good chance. I would take at a bookie a nice little bet on Trump getting into power again.
I think that's highly plausible. But it does sort of throw question marks as to when you talk about recession, in order for there to be a recession, the Fed will really have to screw up, right? And therefore, that's really where it comes to what the Fed are going to be allowed to do and what they're not allowed to do. And maybe when we talk about the FOMC or the Jackson Hole, I should say, we can talk about that a little bit more.
Yeah, absolutely. So we've got the Trump, and we're building our case here in an eventless week to show something and to look a little back into Germany, because I think that's interesting for the European Union, what's going on. The latest polls showed that in Thuringia, smaller one of the German states, the AfD is at roughly 34%. The AfD is what they call the right-wing populist party. Yes, the former part of the GDR, which became Germany after reunification, they are more on the conservative side. But the interesting point was that the Greens, who are responsible for the economic policies we have in Germany and in Europe, are below the 5% hurdle for the first time. Why is that interesting? Thuringia, the next elections are in 24, but we have two biggies coming up in Germany in October, which is, you can see that on this slide, it's Bavaria and it's Hesse. Why are these biggies? Because in the German federal system, all states who make money pass on money to the ones who are not making any money. And Bavaria is the biggest net payer in this scenario because they have all the industrial companies and they were far more conservative, which there seems to be a correlation between being successful in business. And Hesse, as the financial center and an industrial hub, they have elections, and the forecast for the AfD are, as of today, they'll just be at around 15%. So half of what the forecast in Eastern Germany in Thuringia is. And I'm getting very, very suspicious about these forecasts when you think, wait a second, in Germany seems to be in real economic trouble. One of the big car suppliers declared bankruptcy, surprisingly, last week, which nobody expected. I forgot the name, unfortunately. But it was a biggie in the news cycle. So people start losing their jobs. And when I do my private surveys in the building and construction sites where I have quite good connections, you see all the German Mittelstand, the small entrepreneurs, they still have order books, but they're empty. So they still have contracts at the moment. They're still making money, but they start looking into the next 6-9 months. And there seems to be a gaping hole of people wanting to invest. Another side story was this week, the German Minister for Construction and the German Minister for Families, and he couldn't make that shit up, were discussing the point. Apparently, in Germany, we're running out of living space. So the discussion they want to elaborate in Parliament and investigate is whether older people like you and me, Nick, who live in big houses because the kids left, should actually surrender the space we have available to families with children. And I first thought that was a joke news. No, they're really talking about that. And then people who did not grow up in the GDR, neither did I, but I have a lot of friends there, said, oh yeah, we had that. If you owned a big house, the communists came and put some person in, and you suddenly had a subletter in your house because you had too much room available. So with all this going up and hitting the press at the moment, it will be very, very interesting how the elections in Bavaria, which is still mostly conservative, and in Hesse will show up. And then you have the typical German phenomenon. What happens if socialists mess up? They never adjust, they double down. So they will bring us deeper into this malaise. And that all brings my world economy outlook together. If Germany fails, Europe fails economically, then America is not doing well, China is not doing well. We might even get this depression or deflation spiral being initiated by the will of the people being neglected, and especially the states. You're half Brit. They picked a fight over tea a couple of 100 years ago. They said no taxation without representation. And that is a scenario people tend to forget. If you don't hit the history books, you don't know what was going on. So I thought we could get into a hot autumn here. And especially Germany is one of these cases where I'm scratching my head. We see DAX at all-time highs with companies who are driving around with mofas selling pizzas, where we in the past used to have the biggest, best engineers in the world producing the best nuclear power plants. And people seem to ignore that. Then the winter is just ahead of us. Last year we were lucky. We had a mild winter in Germany. We had enough gas and we had enough electricity. But last year we still had 2 nuclear power plants which were delivering reliable 12 gigawatts of electricity. Now Germany is a net buyer. Put all these little things together and we might end up in a real pickle. However, it just cries for, and I have a chart at the end of the presentation about volatility again. So that's my take at the moment, what's going on the political front in the United States, a little bit an outlier scenario, maybe not. Germany, what to look at. And then the big story we discussed several times when we gave them recommendations what they should do if they want to come up with a new trade currency, the BRIC meeting. Nic, what happened at the BRIC meeting?
Well, before we go to BRICS, I mean, I do love these charts about the German political situation, I must say. And as a foreigner, I'm an observer, right? But, this is ultimately, this is not wrong, right? What you're saying is that, I mean, originally when we discussed this, the AfD getting a few more votes, and I said, well, you know what, this is midterm. In a midterm, you kind of expect that. But this is more than just midterm blues. I think this is something that is, at the core of what's happening right now for, with the people. And when you see and hear, what sounds ludicrous discussions about sort of housing and all of this stuff, by the way, Bitcoin solves that, then you've got to say that Germany, we've always said it has really a governance problem, and at its heart of politics. And I heard Merz in a sort of mini speech yesterday where he was talking about energy and how energy is very expensive and it needs to be kind of subsidized through reduced taxation. And I've got to say, even they've got it wrong. They need energy. They don't need subsidies. Subsidies is giving money again, to throw money to solve a problem rather than solving the problem, which is, back to nuclear and all of this stuff. And when you hear from the main parties in power and the main party in opposition failing to come up with solutions, then, Germany is really uninvestable. And that's really bit of a sad case because, the car industry powering ahead, and now it's forced to make, go in a certain direction away from, I think, the will of the people in the industry. And that's all very bad. And at the heart of Europe and the euro, this is not good. And what that means, perhaps we're going to see some more fringe parties, put it this way, in power, rather than these people who continue to make mistakes.
I think we should definitely make a Germany nutcase special. I have so many notes here of things that happened, which are just this morning. I went through the papers and there was one thing I didn't even speak about. It was the new Carbon Emission Act, which is a so-called cross-border act, a way for the European Union to tax carbon emissions on a worldwide basis. That has forced now all German companies, it's only Germany, you never hear that they forced the French or the Italians or the Spaniards or the Portuguese. So we seem to be at the forefront, actually, to make a 3-level assessment. So if you are a company in Germany, which is buying stuff not from the European Union, then you have to produce papers, first of all, how much carbon emissions you create by selling this stuff. Then you have to prove how much of the product that goes into what you imported, what the carbon emissions for this product are. And then you have to also prove the efficiency of the producers of the products that come in for these, for the carbon emissions. First of all, you don't get the data. Yeah? You're buying products from China to get in. How on earth would you prove that? Which means Ayn Rand wants that. The government only has control over criminals. If you don't have enough criminals, you make some. So you introduce laws which are objectively not quantifiable. Like, how on earth would you know how much carbon you're producing if you're importing X, Y, and Z? Good friend of mine said their company is in that business. They just spent 28 million on an assessment how their carbon footprint is. Wow. Huh? And no, there are millions of points here, Nic. I totally agree with you. We should get deeper into this whole scenario because it also makes good television. Yeah? Simply true. Yes, you have the advantage of sitting on the sideline. You're not a German by nature.
They won't let me vote here. I don't blame them.
Yeah.
Yes,
I'm just sitting here as a German with blonde hair and grey beard and think, what the hell is going on?
Well, I mean, it's your fault because you kind of brought this up in a way with the BRICS, and as you sort of started with Germany, BRICS, we've spoken about this before. Why do they want to sort of form this club and stuff like this? And at the end of the day, perhaps this is a better world as an investment, for the future. And my view on that if you want to allocate your capital for the future, go and stick the money in places which are actually growing and a larger percentage than what is represented currently by the MSCI World Index or any of these global indices as they are. I think there's much more scope in these other countries than there is for investing money in, we just talked about it, in Germany. For what? I mean, what kind of governance have you got? What certainty do you have as a company over here for production, for energy, for all of this stuff? And we talk about the expensiveness of, if there is such a word, of American stocks and the like. So yeah, the BRICS is but it's always been there. Yeah, I mean, it's not as if it didn't exist before, but perhaps as a club they are much stronger than as a decision of, oh, let's go and invest in India, let's go and invest in China. Perhaps they're able to create value by getting together in such a way, and than what they have been able to do on their own. Yeah.
I've just pulled up the chart here of the BRICS countries and also the new members and applied for membership. And one of the interesting points, I really had high hopes for the BRICS. Yeah? At this meeting in South Africa, we had that in a couple of podcasts where I said, yeah, fine, if you want to introduce a currency, a trade currency, which could make competition to the US dollar, you should upload the BRIC countries with heavy commodity-heavy countries. Yeah? And a lot of countries, obviously, Iran just joined, if I see that correctly. Nigeria is one of the candidates who applied for membership. Venezuela is now part of the club. That makes a lot of sense. And then you have countries where I was asking the question to you earlier. What's the reason for Bangladesh wanting to join this club, or Indonesia? Is this just geopolitical considerations that go into there? Because is strength in numbers? it's an old saying, yeah, strength. We have strength in numbers. In a case like that, where you actually want to achieve that, I think the opposite is true. You have a lot of guys with all individual interests. Not a lot of these guys bring things to the table, in my definition, like huge resources which you could tie to a currency. So was that a non-event, Nick, or is there still a chance that, or a possibility, don't want to call it a chance even, that something disrupting will develop out of this?
Well, I think so, the latter. So I think this is if you want to build something with power, as you rightly say, you need to sort of focus on certain attributes of your members. And you named, well, why Indonesia? Indonesia by 2050 will probably be the sort of 5th largest GDP in the world, or 6th, or whatever it is. This is a fast growing country with a huge population. And it's the same thing with these other countries, that today you say, well, why would you have this country and why would you have that country? Well, look forward 20 years and probably all of these countries will be in the top 20 of GDP, or they've already got so much resources today. And that's why, right? And that's the first thing. The second thing is, did they introduce a currency? Well, yes and no. I mean, if I look at your chart here, it says oil production, 43%. Let's just say it's a little bit more than that. Let's just say that's roughly 50%. If you control oil, then you control everything because you have the power. And what is it that drives inflation everywhere? It's energy. What is it that drives power in countries like Germany? It's energy. So if you can control the energy, then at the end of the day, you control much more than with your units than you did as an individual country, just pumping 5 million barrels a day. Now you control as a unit, effectively half the global oil production, and I think that is currency. That is strength, and that power is something that is yet to be unleashed, and for that reason shouldn't be underestimated. That okay, they didn't come out with some kind of SDR gold backed. Okay, would be nice, but one step at a time. And I actually see that is staring at you in the face here is growth for the future, percentage of oil production around the world, and for me that's power, and that's the thing that everybody else should be concerned about, because Japan imports energy, Germany imports energy. These are big G7 countries that require energy to function. And, where they're going to get that from?
If you want to be a little bit facetious, I think is the word, just look at this map. It looks to me like they're building an OPEC Plus with fanclub.
Yeah, you could say that. I mean, this is
OPEC Plus with fanclub and potential own currency.
Well, at the end of the day, as I say, when you're doing something like this, they decided not to create a euro. Good for them, well done, because that obviously isn't so easy to function particularly well, and it's not really created a geopolitical, strength around the world today, because the Europeans just follow what the Americans do. So effectively, you've got a very strong group of people with an awful amount of control over oil, and with an incredible potential in terms of growth for the future. So this is something to be reckoned with, and I'm, for sure the Americans will not, just say, oh, that's really interesting, and get on with it. So they will, try to disrupt all of this. And, you've already seen it. They were trying to persuade, they were going to Venezuela and saying, oh, well, let's discuss about these sanctions again and things like this. They're coming back now and saying, oh, we used to call you the enemy, and now actually you're not so bad after all. Because, down the bottom, underneath America here is a lot of, power and resource that the Americans would love to be in control of if there is going to be a bipolar world. And that bipolar world over there is stretched to just, below the Americas.
It's an interesting.
So I don't think this is a kind of a nothing story. I think this is is a really important sort of first step.
It's an interesting thought experiment, especially if you I make new associations here. OPEC Plus with fanclub, own currency, and nuclear weapons. Yes, it is a very, very interesting scenario in the development there. And I want to end the note on the BRIC expansion. Obviously, you and I, we would be happy, what we usually don't do, to consult and help them to get this thing done. They know where to find us, over the channel, over your website, over my website when it's eventually out. And yeah, happy to help them to get this installed in a proper way. I hope the Americans would allow us to do that, right? Because Russia is part of the game. Would there be any contractual problems, or couldn't I make holidays in Florida anymore and your golf would be out of the window? Good. Let's go to the next point, because that was topic number 2. And topic number 3, a very, well, how would I call it? Unsuspecting chart. NVIDIA. NVIDIA came out with numbers, and the numbers were not disappointing. They were actually good numbers. Yeah, they still have growth rates, and their guidance was nice as well. I don't get into the details here, but it looked all right. Volatility was previously to the earnings extremely high. Measured in implied volatility against itself, we were in an 80th percentile. So only 20% were ever above this level. And the market was in a sheer panic mode. The scenario being, if they disappoint and they take a 30, 40, 50% hit like Meta in the worst days of Facebook, you will have your crash right here and straight away. That didn't happen, obviously, but what did happen, and maybe I should open the chart, because that always gets people more interested in what's going here. Wait a second, I open this chart, because as an ex-market maker, these moves, and that has nothing to do now with big fundamental things. It's more what I could see here. It's called, in colloquial English, a gap and crap, which we've seen after the numbers. Numbers came out. We saw in the aftermarket closing, market up 7%. Next morning, little spike to the upside. Then we went down, down, and down. And then the so-called plunge protection team, whatever that might be, was very busy to keep NVIDIA 10 cent in the plus, so that they don't close with a red candle in there. Under high, extremely high volume. As a market maker, as a trader, as a day trader, as a punter, that is a scenario for me where I start looking very closely, and think, even though the numbers were all right, not super surprising, fantastic, but they were good numbers. You can't talk about that. The market reaction to that under high volume, not making new highs, better highs, is a big warning sign. Then if you take the whole stretch here, that's what you see, I've had the colorful charts, from the low to the former high, we had a 161% extension at the level of 473. That's exactly where we had the first drop. Then the earnings came. We didn't get over that level. High volume again. So if you would force me again for a trade, which I might or might not have done, that's the point where I would sell call spreads on top again to say, well, let's see, do a little probing attack. Will we see movement to the downside? And that is the chart I have actually in the chart deck, which I thought was very interesting. You know as well, or you do as well as I, usually focus on what does management actually do, and what management did, since we're on an uptrend here, is the recent insider transactions. They're going up and up and up, and everybody's selling. This Mark Stevens guy, they're all independent directors. I'll put the directors on the other side, and they're selling massive amounts. He sold 118,000 shares at a price of 433. That is big money. 45 million. I don't know how much money he gets in, or how many share options he have, which have to be vested anyway in a certain cycle. But management, one would expect to see some green dot here if the real price of NVIDIA, with all the AI hype we have, is at 1,000. We don't see that. I believe what I see, obviously they're backward looking, and maybe when the next publishing cycle comes, we'll see huge green letters of directors who bought shares in NVIDIA. And then NVIDIA had one little side note. They also wanted to have a repurchasing program. I've forgotten the number. Was it 35 billion or something like that, Nick?
I didn't see the details on that one.
I might get the number completely wrong. It was double digit. It could be 35, could be 85, and I'm misremembering. But in the greater terms of market valuation of this company, that doesn't make any difference whatsoever. So taking this into consideration, plus how the stock traded after the earnings came out and this extremely high volatility, I thought, yeah, it's definitely worth looking at again. I stopped shorting after my first probing attack and just sat on the sideline. What I did in the meantime with this high volatility before earnings, if you've watched the Wednesday show, I've announced that before the earnings after closing came on Wednesday. Obviously, I recorded that with Marcus on Saturday already, but I exposed myself. I gave the trade structure out and was already thinking, how do I backtrack if that goes in the crapper? So it didn't. On Wednesday, next Wednesday, if you want to watch that, I'm taking a victory lap and explain a little bit why I did that, how I did it, and what was the motivation for this trade. So that earned me a decent return to actually do another probing on the upside again. Not that I want to short them out right now, but if I look at the chart again, there is this huge gap we had from the last earnings, which should at least be tested, whether we will close that or not. So on a short-term basis, I would be mostly bearish now on NVIDIA, because even though they had good numbers, we didn't see this big move to the upside coming in, and management still thinks they're making a good deal by selling their shares at these levels. Any take on that, Nick?
Well, I mean, on the story for NVIDIA in the future and stuff like this, when I look at that chart, I'd say, maybe there is a bit more correction. Maybe there isn't. That bit in the middle, which was the huge gap there, is this sort of wave 3 of 3 in my language. Which means that, there's more to come on the upside, and, NVIDIA will see, in my view, much higher prices. When I look at this management thing, by the way, Mark's did, so he's the last one was, see that bit in the middle there where you've got that bigger gap. That's kind of what would be in Elliott wave be a kind of a third of a third wave, the most powerful part. And that would normally, let's just say, be the middle, if you like, of the whole wave. So, we started at 100 at the low and we got.
Does that make sense? That's the default setting of TradingView.
Okay, here, well, there you go. Look at that. That 3 in blue in brackets is wave 3. See that above that is 3 in brackets blue. That's wave 3. And then below that, you've got you had it at the right point, the wave 3 in orange. That's wave 3 of 3. So wave 3 of 3 basically is the middle of this whole thing. So then you get wave 4, which is the correction that you're in now. Wave 4 normally ends in the sort of previous fourth wave, the fourth wave of the previous wave, which is the fourth wave in orange. So somewhere around the 400 to 380 is that on this thing. But then wave 5 has to go, and wave 5, let's just say, will be the same length as wave 1 in percentage terms, and that sort of takes you up to the sort of 500-ish somewhere as a real number. That's kind of the way that I would read it. I don't think necessarily that this thing is over now, but all aside, when I looked at those directors things that you flashed up there, I mean, the guy who sold the top guy who sold it, he only got 51 million out of a holding on the right, it says, of 2 billion. I mean, he may well just have, had to go and buy a beautiful house somewhere. It's not a lot, really, is it, in percentage terms? When is the director's activities large enough to actually be meaningful? And when it's above what percentage would you say is meaningful? And I would say 50 million out of 2 billion is probably pretty small.
Well, the question is with these trades, and you also worked like I did for years in the inner workings of investment banks. And the first time I heard about that was as a young trader, the so-called gate swap, stuff that doesn't need to be reported, performance swaps. They require a certain amount of collateral. in there, which you could get through do the official sales. You don't want to depress your own market, but at the same time, obviously, you are very keen on locking in the profits you have. I don't know what's going on there, but it's always worth just to have the big picture view from the outside. They're not buying. Let's put it that way.
It's true, but they were selling at 100 and 200, and it's now 400. Yeah. So you look at the ones at the bottom here in October 22. Blimey, was it really that low? 117 in October. Yeah, quite.
Yeah. No, so very interesting. NVIDIA, as I said, tune in next Wednesday. I go a little bit into the details in German, obviously, into this earnings trade, the high volatility setup, which I liked. And then we have NVIDIA out of the way. And the last point is, obviously, I want to ask Nic for permission. Nic, when can I actually start buying TLTs? I'm forecasting a recession, depression, a desperate market retracement on the equity side. I don't believe that we will have a correlation 1 event anymore because times have changed. When we had the correlation 1 event, people were sitting on profits in their bonds. So they had to sell them because they had profits. You said to me earlier in the green room, the classic 60-40 portfolio, all these guys got screwed over the last year big time. The TLT lost 50% in its value. So if we see a crash in the equity market, I don't think then that people will start selling treasuries because they have lots of profits on them. The opposite will be true. They'll say, okay, fine, what's happening next now? The Fed will pump down interest rates, and they will do that massively. I want to be long duration as much as I can because we already had the 50% correction in here. So that is my question. What I have here on the chart is simply a slide from Incrementum about the maturities. When they the maturities of various countries, UK, Germany, France, Austria, and the United States, and the red bar simply shows that in the United States, short-term treasuries, almost 40% expires in the next 2 years. Is that a counterpoint to what I'm just saying, or could I still go long TLT and be happy with it?
Well, I mean, last week we talked about that, and I was itching to say, look, it looks as though it's been off my radar for a while because bonds, I don't like bonds. There was a time where I liked them. Now I thought, these guys at the Fed are just doing crazy stuff, so you got to better stay out of that one. And when I look at this thing, I thought, okay, 425 is probably a reasonable target. We got there. There are people who talk about 4.5%. I think that's also not unreasonable, but we're in that zone where you'd say potentially it is an interesting play. Nothing more than that. It's an interesting play, not an investment. For a long, we talked about sort of financial repression, and in a financial repression, the government of the day do not want to offer you real yields of 2% plus. They want negative real yields. So the only way they can do that is if they allow inflation to rise above the level of the yield. And, that would be, if you like, the play before you get to that sort of negative real rates. And then you've just got to let them go. You have to lose them. So, we're in that zone. It's interesting. When I looked at the chart just before we came on air, it hasn't turned yet. So for me, the spread between the SPX and TLT hasn't turned in favor of buying bonds versus stocks. But in Germany, it's much closer to actually turning, where you'd say, okay, I'd rather own bonds than own in DAX, certainly than in the US. But when we look at this chart, which is more important than, should I buy treasuries and make a quick buck? What this shows you is, this is a badly run company, where if you had a bank which was being funded all at the short end, and, suddenly there was a run on that bank, you'd say, oh, well, it's badly run, which teach you a lesson to have your money there. This is really, these guys are in trouble. This is not clever for the Americans. What that means is that the financing costs are going to quickly rise. So the interest payments on the debts will quickly rise towards this sort of 5% level. It's not as if you say, oh, over time we get the refinancing over the next years and, the long end's at 4%. So it's none of that. They're going to be paying 5% on stuff that they issue on average. And that means the interest costs are very quickly going to rise towards the 2 trillion per annum. And this, tells you, this is an emerging market, right? Where they don't earn enough tax revenue to pay their sort of necessary costs of, I'd say defense is a necessary cost for the Americans, but, certainly the medical and, all of the benefits that they offer to their people. They don't have the tax revenue for that. And then on top of that, they have to pay another 2 trillion of interest a year. They're just printing money. Where does this thing get funded? Who on earth would want to fund this thing? And how could anyone, if you were a bank manager and a client came in with that, say, well, I need some money, this is my sort of funding profile. You'd say, well, when are you going to pay this off? You won't. You don't earn enough even to pay the goddamn interest. So if you're just going to be printing money, good luck to the dollar. And the only way that they can actually do that is to inflate this debt away with financial repression. This notion of pound, which he came out last week to say we're not going to move on the inflation target of 2%. Nonsense. It's not their call. Go and say to all of those people who want to get voted in before the next election and say to them, oh, by the way, I've got a great idea. Inflation's around three and a bit right now. I think if I, lose 2 million people from the employment statistic and make them unemployed, I should be able to get down to about 2.7. You cool with that? And then, of course, we won't reach our target until 2025. So I might have to lose a few more. Forget that. Before you finish the sentence, the government have already stood up and said, forget all of that. Target's 3%. We will not accept to jeopardize the economy just so that you can squeeze the last blood from that stone to supposedly get this inflation number down to your 2% target by 2025. In other words, after the election. So it really wouldn't surprise me if somebody stands in before that and says, this target is going to have to change. You're going to have to change your style. And as I say, this is totally unsustainable. This is an emerging market. And therefore it comes back to your question, should I invest in this emerging market? I'd say, yeah, well, when you get a decent interest, like 7-8%, for an investment, potentially, yeah. But for a trade, yeah. For an investment, no way.
Well, we could circle back to the lucky Trump scenario we started this whole conversation with. He was lucky enough to, well, if you can call it like that, not win the election before inflation hit, because you can't blame that on the Democrats or on Biden. Inflation would have hit the United States anyway. So Trump was out and could turn around and say, oh, yeah, it's the Democrats. Since there was no inflation when I was in office, and now Biden has taken over and suddenly inflation spikes. Bollocks. We all know that would have happened anyway. So now we have this scenario I painted at the beginning. Markets are falling. Inflation goes down, but the Fed is now behind the curve again. Trump comes in and says, okay, there are two ways. Either I can fight inflation by being restrictive, oppressive, as you call it, or I could count on productivity. Yeah, we go to the other side of the equation and say, fine, Mr. New Fed chairman, because I already promised to fire Powell, you will take interest rates down because the state needs financing. At the same time, we're opening up the powers of capitalism and start production again. Then you would have squared the circle. You would get out from underneath your debt because you have growth in the economy. Interest rates would become lower again. America wouldn't be a questionable case anymore. And that would be actually the time, if I think longer terms in terms of portfolio, if this scenario happens, Nick, I would mortgage the bloody house and load up on then cheap equities when they're coming out, if that scenario happens.
Well, when they financially repress bond investors, in other words, when they have interest rates on their debt below the level of inflation. At the moment, it's the other way around by 2%. When they financially repress, then this will be like the 40s, where effectively the total return on treasuries, where they capped yields at 2.5%, I think in those days, the returns over the sort of this repression time was something like sixfold in equity versus what you earned by owning bonds. And so in that scenario, you are in an emerging market. I mean, you might load up, but do be careful about your currency. But, otherwise I would say, that would be the game, right? But you can see today what's going on. We talked about it again, I think it was last week, week before, whatever, where I said, people are already shifting into expensive equities out of 60-40 portfolios, where effectively they're saying, well, maybe we don't need so much fixed income. Maybe we can just sort of lower it down a little bit. And remember, the size of the bond market is absolutely ginormous. And it just takes a little kind of adjustment to those kind of balanced portfolios for you to say, well, actually, a huge flow of money will come into the equity market from already the bond market. Certainly won't be coming from Japan. Certainly won't be coming from China. It's got to be coming from somewhere else, and most likely eventually the Fed.
I agree. Fantastic. Then let's finish up with some lighthearted slides about market, sentiment, I call it. That was an interesting chart. It did show you the biggest short position ever in bond prices on the 2-year notes, which is, we've seen that. Suddenly the market turned negative from, we don't see, we've seen easing cycle, etc., since Jackson Hole or the week before. That seems to have changed. Again, a tactical position where I say, fine. Maybe let's load up short-term on bonds, on TLTs. There might be a trade somewhere squeezed in. And that was one of the charts. The other chart I find quite interesting is everybody who is old enough and long enough in the markets knows that. What do you see in front of you? You see, that's one of the adverts I get sent regularly. If you want to buy property in Dubai, you are able now to invest, starting with 2 million euros equivalent, to buy a plot or in the highest residential tower of the world, which is going to be built in Dubai. The old rule is what? Whenever you see the highest building being built, and that holds for years, you don't get the crash next week, but that usually marks a high point in world economies, in positive attitude, because you only get these things financed when people really believe the party goes on. And I found that quite interesting. It's just to have an eye at it. Then we have the all beloved CNN Greed and Fear Index. We are in neutral territory. I'm sniffing a little bit more fear at the moment in the market than neutral, induced by the bond markets, obviously. And then my last slide is we are going into September, and September was, at least statistically on average, never a good month in returns. What does that imply? Volatility going up. One of our colleagues has this fantastic line: nothing ever bad happens with the VIX below 15. Well, we're not below 15 anymore, right? we are fiddling around, and that doesn't mean you should never be not afraid if the VIX is below 15, but usually it goes through various phases. People realize, more volatility is coming. Then we're creeping up at the 15 level. Then we go into the 20 direction, and that's when the panic then eventually could start. But it's actually a good rule of thumb. Nothing ever bad happens below 15. Well, we are now at this point where you should consider what's next on the cards. So I've went through my slides today. On this final note, Nic, thank you very much for it. I think I'll take a first probing positions in TLT. Sniffing around is interesting. I think it makes sense. Chance risk reward ratio seems to be a good trade, at least on the shorter term in there. Otherwise, fundamental position on my side hasn't changed too much. I don't have to chase the market to an eventual blowout top when the risks to the downside are far bigger than everything. Otherwise, yes, we had a boring week. Besides the mugshot of Mr. Trump, not really a lot happened. It could have happened a lot with all these fantastic things going on, but it didn't. Nic, any last words?
I'm still remembering my wonderful holiday, so I'd leave it there. And I'm looking forward to your talk on Wednesday.
Yes, absolutely. I'm looking forward to see you all guys back with Nic next Sunday, when hopefully something exciting might have happened. Otherwise, I think there will always be in topic. We always have the idea, say, oh, nothing really happened, maybe 20 minutes today. And then I think today we ended up talking for an hour again as well.
Blimey.
Yep, what can we say? Nic, thank you very much. Thank you very much for watching us, and share us, distribute us, comment on us, and make sure that we stay on the channel in our English format. Thank you very much. See you next week. Bye-bye.
Bye-bye.